that means we are live here on YouTube, Tackle Trading's daily halftime report, a stock market show where we go through the markets, the indexes, commodities, including crude oil, gold, and all of the other things under the umbrella of what falls into the news and what matters for markets today. Welcome out to our show. We've got Coach Noah Davidson out there broadcasting. He's going to be running the charts today. Noah, how are you doing this morning?
I am absolutely fantastic. Thrilled to be here as always.
And we've got Coach Matt Justice as well, and Cody as always. We got the crew here. And Matt, how are you doing this morning?
Doing very good, Tim. Excited to be here with the crew.
You know, if you're watching our show for the first time, as always, give us a subscribe and click the bell to make sure you're alerted whenever we go live. One thing we do here in the halftime report, we're building our YouTube audience. So we'd love to have you subscribe. And if you are a pro member, great. Fantastic to have you back here in our halftime report. If not, there's always a link to sign up for a 15-day trial for pro membership at Tackle Trading right in the comments. Let's get down to business here this morning here, guys. News headlines today, Matt, are mostly earnings related. You got some banking stocks, some healthcare stocks, some different kinds of companies that are coming out. And I actually thought it was fairly good. The market did as well. There's some mixed information in there. We're sitting at 29.97 on the S&P. Give us a rundown of what you saw in the earnings.
Well, obviously, earnings season is kicking off in full force today with 6 banks, brokers reporting earnings and 2 massive healthcare companies as well, Tim. When I'm looking at the earnings announcements, there was a little bit mixed, but mostly positive coming out of the banks primarily. Let's first look at BlackRock here, Noah, BLK. Now, as we pull up BlackRock, let me just remind you of a comment Larry Fink made, who is the CEO of BlackRock back in 2015. Before I give you his numbers, let me tell you what he said. The only reason BlackRock is in business because the American consumer is too ignorant to run their own finances. And he is right, because they reported $3.7 billion in revenues versus $3.8 billion in expectation. That was a slight miss on the revenue here. Earnings per share. And by the way, before I get into this, how awesome is it that we didn't open with trade?
It makes me happy.
It just makes me happy.
Definitely.
Right? It just makes me happy. Did really good on earnings per share here, coming in at 7.15 earnings per share versus the expectation of 6.95. So a decent beat by about 20 cents on earnings per share, and revenue up 3.2% year over year. Those are the numbers. Obviously, the market is responding big. Noah, give me your technical read here.
Well, it's a nice little consolidation pattern. You got a double bottom coming into the earnings and a nice little pop on that. We always typically see a nice little increase in volume when you get that. But I'd say you're still in a consolidation pattern overall, but with earning numbers like that, I wouldn't be surprised to see it testing out on that resistance zone, get it up above those moving averages. There's a big resistance zone here at 450. So 450 is a price threshold that it would have to break. And if it can break that, then you're kind of into the trend zone. But again, not bad numbers. So I would
decent numbers, and that weekly chart. I mean, a little bit of a mix from a short-term type trend to an intermediate trend. But a break above 450 could be significant for the company. You should see it kind of rise into that next level of resistance based on these numbers I'm seeing.
Yeah. Should just get a close above there, and I think you'd be off to at least testing the next zone.
Is this company? Based on, let me ask a question to you real quick. Based on what we're seeing in the numbers, based on what we're seeing in the price action here, are you guys getting interested on BlackRock?
I could be. I mean, I like the company's business model. I like what they're doing. From a financial product perspective, they actually put out a lot of ETFs as well, Matt. And they're right. The American public isn't informed or educated on what products to invest in. But they're one of the biggest issuers of ETFs in the marketplace, which I do like. I like the ETF product. If they broke out and run and kind of broke that triangle, I could get interested. I haven't owned the stock in a long time.
Then how about they just put ETFs in people's 401ks instead of mutual funds, and I can support BlackRock then?
Let's get Larry Fink on the podcast. Maybe we can ask him about that.
Well, I'll see if I can DM him on Twitter there. Okay, let's look at the next bank very quickly here. No, let's look at Citibank. Citibank reports earnings. Let me give you the exact numbers. 1.98 on the earnings per shares versus the 1.96. So a slight beat on earnings per share. 26. This is the big number here, guys. 26.1 billion on revenue versus the expectation of 18.5 billion. That was a big get when it comes to the overall revenue numbers. Revenue up 5.5% year over year. We're going to call that. I didn't see the guidance number, so I can't call it the triple whammy, but it's getting close to that. Earnings per share was a slight beat. The technical read might be a little better than the numbers outside of the revenue. No, give me your breakdown technically here.
Well, it's got a nice little breakout potential here at 71, 72 ballpark. There's a bit of a cup and handle forming on that. It's above all the moving averages. So you got that little high at 73. But when I back it out to the weekly chart, there's a little bit of congestion. There's another resistance zone at 40 or 74. So, but otherwise, I mean, it's just knocking on that resistance door.
Yeah.
If it can clear that $72 to $75 ballpark, I think you got a clean shot at 80. And again, on a weekly perspective, it's, you know, showing some signs of strength. And I do like the cup and handle down here on the daily chart.
Yeah, I do too. The one hesitation I have is when you think about the step system, one of the things that we look at in terms of that technical system, and that's primarily a swing trading system, but one of the things you got to look at is to the left of the chart. And when you break out of that 71 on the positive news, you got 73. And when you break out of 73, you got 75. I think you nailed it, Noah, where you kind of waited for that 75 handle first. There's just too much noise between 71, 73, and 75, in my opinion, to really see anything aggressive here. What do you think?
Well, same thing. And if you like the breakout at 73, maybe you start small and only add to it if it breaks 75. Do you have to wait for it to break 75? A conservative trader would. They'd wait and see if it can clear that, but that means you're probably weeks out from the trade setup. Because it would probably run up, sell off. You know, it might take a little while to get there. But if you like the breakout here, start small. You know, one contract type thing, two contracts, and then add to it if it breaks.
A little scale in as it breaks out of 71, breaks out of 73, breaks out of 75, scale into the position.
Yep.
I like it. So a pretty good bit. Revenue numbers out of Citibank were really, really good today. Goldman Sachs, let's go ahead and look at their earnings report here. Goldman Sachs, a little muted on their response. Goldman came in at $4.79 per share versus the expectation of $5.03. So a miss on earnings per share for Goldman. Revenue came in at $12.8 billion versus the $8.6 billion expectation. Year over year revenue, 47.7% year over year increase. That does not tell the story though for Goldman Sachs, because when you see the revenue numbers at, you know, where they are at 47.7% year over year increase, you'd be like, wow, that's you know, Facebook type year over year numbers, Netflix type year over year numbers. They must have had a fairly bad earnings season last year. However, when you look at their profitability only came in at 1.8 billion. So that was a fairly big concern for Goldman Sachs. So a real muted response from a numbers perspective. What's your read here on the chart, guys? It was down early today. Cash open kind of carried it up a little bit.
I like the company. I know that that is a disputed point of view within our coaching team. There's no doubt about it. I actually think they've made some improvements in the way that they do business over the last few years, and I like the long-term prospects of Goldman.
They've done less spoofing?
Correct.
Okay. But they still do it, but they've just done less of it, right?
Well, they're trade desks. I mean, who knows what they're doing on those trade desks? But they are neutral on this chart from a long-term perspective, Matt.
You didn't want to defend them, did you?
No, I'm not interested. No. I have no interest in that conversation. Neutral for me. I'm not interested. Even on the Citigroup chart, by the way, a lot of these bank earnings companies, even the numbers look good. I could be interested from a covered call perspective on some of those, you know, directional trading. I had better picks on the option report you guys put out last weekend.
Well, of course. I mean, those are the best technical conditions in the market. But, you know, I'm not interested in Goldman Sachs. But then again, I'm never interested in the evil empire. So I just don't trade this company to the buy side in any capacity. I'll trade it to the downside, but not to the buy side. Citi, I just don't. I see Noah's scaling in approach above 71, 73, 75, but I'd like some of those other picks first. I will tell you BlackRock, though, I'm a little interested in above that 450 handle because there's really nothing to the left of the chart on BlackRock until you get to about 475, which could be a fairly decent swing trade. So out of the bank so far, BlackRock is the one that really kind of stands out to me. JP Morgan, guys, JP Morgan came in with 2.68 earnings per share versus the expectation of 2.44. Beat on earnings per share, came in at revenue at 36.2 billion versus the 28.2 billion, 9.2% year over year growth. A very, very good. We'll give it, let's give it a rating system 1 out of 5. I'd give this a 4 out of 5 from an earnings perspective based on what we were expecting to see in JP Morgan. Obviously, the market is loving what Jamie Dimon is putting out there with JP Morgan and Chase. A breakout, cash open, starts to price appreciate, and you're breaking out of that resistance level at 120. No, give me the technical breakdown here.
Well, look at lo and behold, check this thing out on the weekly chart. That is about as clean a technical break as you could ask for.
You don't get prettier.
That's pretty. That is textbook right there. You know, and again, from the daily chart, you got a lot of energy, nice uptick in volume. I'd like to see it, maintain the close above that resistance point. But from that weekly perspective, that's got the potential to be a decent breakout based off of the size of the previous consolidation, pattern between 105 and 100. You could reasonably expect that 15 to 20 point pop to the upside. So, target of 130 is pretty easy on the weekly chart, which means more of a position trade, not a day trade. And then, you could obviously see that going up to 20 points. So that puts 140 within reach. But again, that's on a weekly time frame. Daily chart wise, you're a little overextended, in the short term. But if it closes above resistance, there's really nothing to hold it back.
You know what I love doing with companies like this, Matt, is sticking them on a watch list and maybe waiting for a trade over the next week or two. Earnings reaction, you can absolutely buy. I get that with momentum and have some kind of very aggressive stop loss management. But when the fundamentals came in pretty strong and the weekly chart is looking good, but the daily chart is not perfect timing, it tells me watch list, kick it onto a watch list, leave it there for a week or two.
I could certainly see somebody, running a momentum trade here. I mean, you had good numbers. Pull up an intraday chart here on JP Morgan real quick, and let's look at that intraday momentum as the cash open really kind of started happening. So obviously you see the numbers from the overnight action, correct?
Yep.
And then the market, when the cash open, it just kind of runs. Now, I want to chase the dragon towards the top of the intraday chart. Maybe a high base intraday breakout, maybe a intraday retracement type situation. But I could certainly see somebody doing this from a momentum perspective. I'm kind of like you though, T. I want to see kind of where the close is today.
Yeah,
I want to see those because some of the, like take United Health for example, which we'll get into in a second. Gap out, kind of a little bit of a pullback intraday. So I want to see if the strength really shows strength above that intraday resistance level before we start getting a little aggressive. But it is absolutely a watch list candidate based on the technical breakout of the 52-week high. Also, the numbers were absolutely fantastic coming out of JP Morgan. Now, Charles Schwab, let's go look at SCHW very quickly. Earnings per share, 74 cents versus the expectation of 65 cents, 2.7 billion versus the 2.7 billion in revenue. So they came in line there. So top line beat, bottom line not. 5.1% year over year increase in revenue. What's your technical read here? The numbers were okay. I think some of this that we're seeing from a cash open perspective is just, carry through from all these banking stocks, not necessarily individual components. I mean, JP Morgan aside, JP Morgan, BlackRock, pretty decent earnings, but JP Morgan is really the only standout candidate, in my opinion, outside of Wells Fargo, which we'll get into here in a second. So honestly, lukewarm on BlackRock, Citigroup, Goldman, and Charles Schwab. JP Morgan, Wells Fargo, in my opinion, came in with the two best earnings reports, and you're just seeing follow through within the entire sector. Noah, what's your read here on the technical condition of Charles Schwab? There's no trade here. We're still in a downtrend.
Yeah, it's not a pretty chart. So, based off, the earnings numbers, this chart doesn't really draw my attention as far as wanting to trade. It's smack dab in the middle of the last support resistance zones, really relatively sideways to downward in a downtrend. Down below the 200 period moving average still. You are seeing it get back up above the 50 and the 20 off of the news, but then you're still in a downward congestion and there's a big support resistance zone right here near 40-ish. So, old support resistance pivot, I really wouldn't be interested in this until it broke above the 200.
which is months away, by the way.
One interesting thing about the price action, though, is that it is backfilling all the way from that news report when they came out and announced free commissions, Matt. I mean, that's where it was, $41 a share, and now we're almost recovered from that whole thing. I just want to, obviously, those numbers are not in this earnings report, so we need to see how that plays out. But like you said, when the news came out, Tim, it's not like Charles Schwab does a tremendous amount of business from a commission perspective. No, 3% of their profits were commissioned. So I think this company, out of all the brokers that were beat up, if it could break back out, and that's a long time away, I think I would be interested, actually, because I like what they did.
I want to get you guys to take, before we get into the rest of the earnings here, we've seen time and again from the cash open versus the overnight action, a market response that is fairly bullish. Would you agree?
Yeah.
But the numbers, honestly, are not that great. They're really not. I think a little bit of what is happening here today at the very beginning of earnings season, because this is really the kickoff of earnings season here today, is the expectation coming into earnings this go around in the third quarter was that we were going to see our third consecutive quarter of decreasing revenues, correct? Mm-hmm. Okay, kind of that continuation of the recession we've seen in S&P 500 revenues. So FactSet came out, and FactSet is a widely followed earnings tool website and whatnot. They came out and they were expecting 4.6%. Let me get this right: 4.6% year-over-year decline in revenues. All right. Mm-hmm. With what we've seen out of the banks and the healthcare stocks so far, and mind you, we only got a few of them so far, but they've actually shown a lot better than that. So the massively decreased expectation coming into earnings season in just the first day of earnings season, obviously they've done a lot better than what the expectation was. And so I think you're seeing a little bit of a more bullish response than we typically would be, just because that expectation was so low coming into earnings season. What do you guys think?
Yeah, I mean, lower the bar and then you can jump over it, right? I mean, that's the logic behind how these companies operate, and it's what we're seeing in day one here, mostly positive news as a reaction. But Matt, the numbers aren't exactly fantastic from a year-over-year perspective. So it's going to be interesting to watch it through the week and through the season to see if that theme continues. But here's the thing. I mean, the S&P 500, Noah, we're in a high base wedge. It doesn't matter if it is a good report or not. If the S&P breaks on these earnings, on the back of these earnings, Matt, you have to respect it. 3,000 is major resistance from a long-term perspective. I don't have to respect
it with massive bullish behavior, though.
You don't have to get aggressive, but you're going to change your posture. I mean, you would go from a 0 to a 1, I'm sure, if we broke above 40-30.
But 0 to 1 or 40 to 30 is not an aggressive bullish behavior.
Yeah.
So what do you think, Noah?
Trade what you see, not what you believe.
That's true.
Because I have a lot of opinions about the economy.
I get that. I understand that technicians love saying that.
Yeah,
I do, but I'm going to push back a little bit. Numbers matter. Revenue matters. Earnings per shares matter. It's not just what you see in the chart. The numbers matter.
Right. But if it does break, I would expect a short-term irrational exuberance type move where you get a short-term run. And then over time, I think you're right. The revenue catches up with it. But the initial technical breakout, I think it creates short-term energy. But just that, short-term.
Yeah. Let's go back to Wells Fargo very quickly. This is the last bank that reported earnings today. And I felt like this one was again, outside of JP Morgan, you really had mixed from an earnings per share versus revenue perspective on all of these earnings reports. But Wells Fargo came in at 92 cents a share earnings per share versus the expectation 1.15 cents a share. So a big miss on earnings per share. Revenue came in at 26.9 billion versus 20.8 billion. So a beat on revenue. Mixed earnings report, year over year, 4.5% increase in revenue. Obviously, market is responding bullish, up 3.82% so far on the daily action. Not a lot overnight because it reported this morning. No, if that breaks out of the high point there, what do you think?
Cool. Let me back it out to a weekly chart. I think you're running into a congestion. Well, yeah, this is a big support resistance zone here at 51-ish. So if it can break out, there's a little bit of congestion in here, but you got that 200-week moving average. I don't like it as much as I like, say, JP Morgan.
Yeah.
So.
Yeah. Well, and that was my last question, guys. And all these six banks and brokers, BlackRock, Citi, Goldman, JP Morgan, Charles Schwab, Wells Fargo, we've seen their numbers. We've seen the market response so far. What's one or two of them that really kind of get you interested based on the numbers and what we're seeing in the chart?
I like BlackRock for a leap because then I can do leap covered calls on it for 3 months. It's the price at 450 a share, and the fundamentals kind of turned around. Not in the short term, maybe in the week or two, I'll pick up a leap or something like that. I really like JP Morgan. It's the simplest chart. I always say this: pick the low hanging fruit. Do not make trading too complex. It's breaking into a new high. It had a good report. It has no barrier to resistance here. I think JP Morgan to me is the cleanest chart.
No, you?
I have no disagreement with Tim whatsoever. I think he's spot on that. I think he's kind of nailed. He did something interesting there. He tied the personality of the stock and his outlook to the strategy with BlackRock, which makes a lot of sense because you look at BlackRock again. What was their symbol again? BLK.
BLK.
Yeah, it's got overhead resistance, and so you can cash flow and you can take advantage of the probably a bullish outlook, but some overhead resistance. Whereas JP Morgan, I think you got a much more clean technical break on that. And so that I think that opens you up for a little bit more open-ended risk graph style trading or more, directionally biased trading than the calendar spread.
We're talking markets here today on a Tuesday, 10/15/2019. Welcome out to our halftime report. If you are here, I got 65 people here live and 11 thumbs up. Come on, guys. Let's rock and roll. Give me that thumbs up click. Make sure we get that word out there on tackle trading. Matt, the markets, S&P, Dow, and NASDAQ, they all look the same from a technical perspective. The NASDAQ is bumping into resistance. The S&P is bumping into resistance. The Dow is bumping into resistance. Russell is right flat in the range. We got a lot more earnings companies to come out. Do you expect a breakout this week? Do you think the market will, whether we buy it or not, whether we believe in it or not, do you think the market's going to try to break out?
I think it wants to test the highs, but I would be hesitant being aggressive. I personally would. Economically, we saw some nasty economic news coming out of China and Europe today, and on the overnight action, the trade deal that was a non-trade deal that was supposed to be buying, soybeans to the tune of $40 to $50 billion. Reports came out last night that China isn't prepared to actually have the money to come forward with that type of purchases. So the trade deal seems to be unwinding fairly aggressively, even faster than it came together. We'll see how that plays out in the long term. I still think we're waiting on Fed policy in 2 weeks from now. And this is day one of earnings in front of 3 weeks of earnings where we have tremendous amount of earnings to go. So, I personally would be a little risk adverse here, in terms of, being too aggressive. So could you trade to the bull side? Yeah, but I would do it from a cautious perspective.
Yeah, I would as well. Give me the dollar, if you will. No, I do want to talk about this.
Before we get into the dollar and commodities, we do have two healthcare stocks that we need to talk about very quickly. Johnson & Johnson, very quickly here, Noah. Johnson & Johnson reports earnings of $2.12 a share versus the expectation of $2. They came in with revenues of $20.7 billion versus the $20.1. And here's what people need to understand about Johnson & Johnson's paying $8 billion in their failed drug that caused men to grow boobs. They increased guidance after that, guys. They increased guidance. And so you had a beat on earnings per share. You had a beat on revenue. You had a beat on guidance as well. That's a triple whammy, even though it's not a great beat. It's not, massive beat, but that is a triple whammy on earnings. Noah, your gap up ran into that 200-day moving average. What do you think?
Well, I think this is a great cash flow stock from the get-go. I mean, it's got a nice little dividend. J&J, they've survived a couple of litigious actions against them. And I think it's a great cash flow strategy. Now, it's still a pretty sideways channel. So I just focus on neutral strategies. You could sell credit spreads below it, do covered calls, naked puts. I think I think you keep a bullish bias after the numbers come out.
I think so too. Bullish to me would start with it getting back above the 200-day though. It would have to break out of that daily high over there, right there about 135.
Yeah, that's a big fat number for it. That's like a triple whammy with the moving average and all the support resistance zones. That's a strong technical zone. So yeah, you'd want to see it break above that. But again, for cash flow, may not matter as much.
Well, from a fundamental perspective, I like UNH better. I mean, their earnings were a lot stronger, don't you think?
Well, they came in at 3.88 cents a share versus the 3.75 expectation. Revenues came in at 60.4 billion. Mind you, this is a healthcare stock and not Google. They came in at 60.4 billion in revenues versus 60 billion in expectation. They had a 6.7% year-over-year increase in revenue. You got to love our healthcare being a professional business. And they increased guidance as well there on United Health. Really good numbers across the board. The increase in guidance is really the kind of thing that caught my eye. Both healthcare stocks, Johnson & Johnson and United Healthcare, Dow components as well, both increased guidance here. What's your read technically?
A lot of overhead resistance. I don't like the chart is clean. It's pretty sideways. I'd say let me back it out to weekly, get some perspective there. Nice support at 211, 220 zone. Still has lower low, lower high kind of look to it. So same thing. Got to get above that 200.
From a long-term sector perspective, I think healthcare might be my number one bullish sector over a course of a 5-year window, because of the percentage of GDP and the relationship that it plays in the economy and all that kind of stuff. So a company like UNH,
they have the highest PE ratio of any sector in the market.
They do pay great dividends. United Health is consistently profitable. I'm still interested. I don't own the stock. I'm not going to buy the stock. The report's not going to get me in the short term. But you got to like the idea of some healthcare companies if we can come in through the market and actually turn this around. I mean, XLV itself, just from a composite perspective, it's been neutral all year long.
I'm going to push back on that, Tim. If you give me any sector in the market over 5 years, healthcare would not be even in the top 7 for me.
Interesting.
Healthcare's got regulatory eyes on it. It's going through a massive evolution and it has high valuations. So I just disagree with that.
Well, from a demographic perspective, you've got high demand for products and services. So there might be some money in there. I can see.
Does that change the 42 PE ratio it has?
No.
Oh, all those fluffy valuations. The market doesn't care. Blow that bubble up even a little bit.
Oh, is that how you come across it?
That is the way.
Hey,
no, I mean, it's future earnings. Same argument as any growth stock, man. It's future earnings over current earnings.
We're not okay. So are you finally agreeing with me that XLV is not a defensive sector since you just called it a growth stock?
It is not defensive in the current market. Yes, I think we've already agreed on that point many, many times, actually, but you've kind of won that one. Healthcare for me is neutral. I would not touch it in the short term, but from a long-term perspective, give me a monthly or a weekly chart, Noah. I'm talking big picture, 5-10 years kind of stuff. I mean, it is growing and it will be a strong sector in the future. There's no question about it. 30 years ago, healthcare was only 8 to 9% of the GDP of the country. Today, it's 17%. When you look at the jobs reports on a monthly basis, where are the best jobs? Where's job growth every single month in healthcare? Now, yes, regulation, politics, all that kind of stuff could absolutely throw a wrench in the whole thing. But I'm still interested in healthcare long-term, medical devices. I don't like buying the pharmaceutical companies. I feel bad about it, but healthcare insurance, those kind of things, I'm bullish.
It's a sad day in American history when we consider healthcare stocks growth.
It's true, but it's the way it is. I mean, that's it. Capitalist economy that we live in.
I'll not go on that soapbox.
Yeah, defer that one.
I'm not going to touch that one.
Defer.
Move on.
All right, let's talk about the dollar. Brexit and the EU actually, or the UK and the EU are talking about some kind of deal, Matt. They're trying to draft something on paper. The pound is surging on the news. The dollar is kind of flat here in a range, but I thought it was one of the major headlines. If they can move that thing forward in a positive way, everybody was expecting hard Brexit some point this month, by the end of the month, things like that. What was your reaction to the pound and the EU? Do you think they're going to get some kind of deal in place here before the deadline, the end of the month?
No.
Noah?
Well, look at that optimism driving that up. I don't know. I'm very skeptical that they'll get a deal inked, but look at that price rally.
Mm-hmm.
I'm going to put it in the not category. So just like the not QE, the not trade deal, we're going to have a not Brexit.
Well, either way, I mean, you got to stay away from the pound in the short term based on the news and the risk of any random thing just kind of popping in there day over day, Matt. I mean, you can't really predict this price action. It's not like it was on the economic calendar for today that they were going to have some kind of negotiation. So it's
random variables.
It's a stay away from me.
Forex is tough enough without the random variables.
Mm-hmm.
Okay. In Forex, you have all the economic reports, you have all the price action, you have all the central banks. You have enough variables in place when you're dealing with a normal environment, let alone a Brexit environment where we have 2 weeks left before a deal has to be struck before you have a hard out. The only thing we've been seeing in the last 2-3 days is just innuendo and rumors and opinion. That's all we've been seeing. And it's based on certain EU officials saying talks have been going good. And then yesterday talks were going, contracting, and then talks are going good again today. Let's see in 15 days from now. Let's see in 15 days from now. Volatility is the death of theta, and it couldn't be the death of delta. You have massive return if you're right on your direction on the pound. But that also accompanies massive risk. And that to me just is a complete stay away. There's better trading opportunities out there.
I agree. I saw the news and it just kind of cemented my opinion that I'm staying away from the pound in the short term until we get clarity. There's easier ways to trade. There's no question about it from my perspective. Gold is down today. Let's take a peek at the commodities, gold, crude oil. Matt, from a short-term perspective, we've been talking about this one for 2 months. It's kind of fading backwards, downwards, but still long-term very, very strong. Support is sitting here at about 1450. I know the chart has some complexity in that. What's your read on the gold charts?
Nothing has changed in weeks and weeks on the technical condition of gold. When you're looking at this on a daily perspective, you got a lot of mixed signals here. You got a symmetrical triangle on the intermediate pattern. You got a slight downward trend on the short-term pattern. So when you have a mixed read on the short-term versus the intermediate, it becomes a little bit more of a difficult trading environment. You got to wait for those patterns really to kind of double bottom, give you that double bottom on the daily chart, which could happen right there at about 1480. We're ticking at 1483, at 1484 right now. And then once you get that double bottom and then confirmation, then you switch it out to a weekly chart to get your signal. But you got to stay away until we start to see those things transpire.
Pullback on the weekly is looking pretty juicy from that perspective. But then again, on the weekly, we don't know when that signal is going to come. I mean, it could be at any point in the next couple of weeks or even couple of months that this thing could fade back in here. If you compare it to earlier in the year, Matt, between February and April, it was about 2.5 months that it pulled back on the weekly.
Yeah, and absolutely 100%. But you kind of like with the day trade, right? You get your technical read on the 30-minute chart and you trigger on the 15-minute chart, right? You get your technical read on gold on the weekly chart and you trigger on the daily chart. Is kind of how I'm looking at it. So when I'm looking at the daily chart here on gold, you're starting to see a little bit of a compression down there around that 1480 barrier. And if we do get a double bottom, get a little price action kind of settling down a little bit, that breakout back up above 15 or 1510, that might be triggerable on the weekly chart. So I don't think this is weeks and weeks and weeks out. I still think patience is a position here on gold, and we're going to be patient until we see the trigger, and it's just not there yet.
All the metals look the same to me except for palladium, and just a public service announcement. Palladium's a pretty good metal to be owning in the last 6 months or so. Does this trend continue for you guys? I mean, are we overstretched? Is it profit-taking zone? Is it the kind of metal you have some exposure to but not a big position in? Noah, I'm going to get your take first. Just the juggernaut that is the palladium chart. How are you approaching it? And you're on mute. We'll go to Matt first.
Well, I can bring that in pretty quick.
Yeah.
I think above 1600, it's certainly got a lot of energy behind it. It's already touched 1700. I don't think you have the downside risk is to about the 1600 zone, the old resistance point. All signs point to bullishness. Is it overstretched? Maybe, but it's still running. So I think there's still some bullish signals here.
Maddie, are we overbought here?
No, you're not. You were overbought up until about a week and a half, 2 weeks ago. On the daily chart, you consolidated, formed a high base, and you broke out of the high base just about 4 or 5 days ago. So no, I don't think you're overextended on the daily chart. I certainly think it can run more aggressively. Now on the weekly chart, you're a little bit range up on the weekly chart. Okay, yeah. But on the daily chart, no, you still got some room to run.
Quick look at crude oil, if you will, kind of holding down here. We've got inventories tomorrow, earnings on the energy sector not till later in the month for most of the major companies. So in the short term, it's going to be political and currency risk. And right now, we're just kind of flat in that same pattern in a range. Anything to add to that one, boys?
Nah, I think
Not
I'm
much
pretty
today.
neutral. Not a buy, but it's the same kind of thing we've been talking about. Might still give you those opportunities to sell the out of the money puts.
Natty gas, bring it up. Let me take a look at it. Natural gas. We've been talking about it more and more. The NG contract.
Yeah, we'll learn to type.
You still in your 2 by 190 contract?
Oh yeah. I mean, I have a trading plan. Trade your plan, Matt. You know, I saw a question in our clubhouse today.
Well, I
and
was just going to say the last week and a half has been really good for that trade.
yeah,
Your theta's got up to your delta.
it is working itself out over time, which is why cushion low delta spread trading is something I do enjoy. And it's kind of where you can build an edge in the market. Now, I'm not out of the woods yet. I mean, it's not going to build a profit unless more time passes or if it rallies a little bit more. But you like the pivot relationships, and I really like the 3 candles to start the week here. Noah, what's your read on that chart? I'm still seeing neutral. I'm trying to not have rose-colored glasses on, but
Well,
what are you seeing?
You did get a nice breakout. Obviously, we were talking about with this deep retracement back into the support resistance zone. You might see a double bottom out of here in a rally. Back it out to a weekly, chart. You've got this nice little engulfing range here and a pullback with a little bullish Harami type candlestick. So I can see where that might form your higher low. And that's what you're banking on is that higher low holding. And that gives a little bit more bullish credence.
Yeah. Yeah. Maddie, you want to join me on that trade? I mean, we've got some cushion here. You got confirmation. Yeah, I know it's a little early for the chart.
But I will tell you what Noah just did on the weekly chart gives me confidence in natural gas.
Mm-hmm.
I mean, you are seeing slowing momentum in that weekly chart. You're seeing perhaps if you kind of zone in a little bit just in the last like 6 months there, Noah, if you look at just kind of the last little bit, you're seeing that support level on the right shoulder kind of, and it's a little bit of a wonky inverted head and shoulders pattern with that resistance level, but you're seeing that 2.2 handle right there really kind of, hold its head there at 2.2. So when I'm looking at this from a natural gas perspective, am I ready to join you on the credit spread? I was really close 3 weeks ago when you put the trade on.
Mm-hmm.
I'm fairly close still, right? I do want to see that daily chart confirm above 2.4 though. So if I can get something above 2.4, I think you can be a little bit more confident in selling some credit spreads to the bull side. I wouldn't do anything to the bear side. That should give you a little bit more confidence, from that perspective. And that's more based on seasonality than anything. Mm-hmm. Seasonality, natural gas does fairly well in back half of November coming into December and January.
Give me a quick look at Procter & Gamble. I'm just looking at the heat map. It caught my eye real quick. It's one red, very bright red candle in a sea of green here today. And this has been a juggernaut for a long time. It's pre-earnings. What's the news on this one, guys? I did not see anything, but that grabbed my attention.
I didn't see any news on Procter. I was all in earnings mode this morning.
Let me look at
Is
the
this
headlines
just profit taking ahead of earnings? I mean, is that all you get?
I don't think so. That's big profit taking 2.5% on a day the market wants to buy everything.
Yeah, that's right. I mean, usually that would be a downgrade, something like that. If I'm looking at the headlines, I'm not seeing anything that actually hit. Team Tackle, if you can find some news on Procter & Gamble, I would love to hear it, Matt, because that is a concern on the daily chart. There's no question. I know the weekly chart hitting that trend line. It's been a juggernaut this year. Man, when I get one of my companies that I track and trade quite often just randomly popping in volatility, I don't like it. It doesn't make me feel good. Mm-hmm. There's no doubt about that. A lot of companies grabbing my eye from the options and stock reports.
I got one real quick, Tim. Yep. Turkey, we put sanctions on Turkey, and no, they are not tough sanctions. They're actually fairly weak sanctions. But one of those sanctions was on their steel products, 50%. We went back to the 50% steel tariffs on Turkey. Guys, U.S. Steel, Nucor, both popping today. U.S. Steel's up close to 5% today. Nucor's up about 4% today.
Did you read the CEO's comments from Nucor?
I did not.
It was so interesting. Very transparent. I really liked it. You'll have to go check it out. I'll find the headline. He basically came out and said, listen, we like what things are happening. We like our prospects, but next year is a crapshoot. If we don't get some kind of infrastructure deal done, steel prices with the global economy, we can't project that we're actually going to have big profits next year. So he was he laid it down. I was interested.
Tim, how long have we been saying we can't touch this until infrastructure happens?
Yeah.
I mean, we've been very clear in the halftime report for a very long time on that. Infrastructure is the one thing that's been holding these steel companies and some of those industrial companies back a little bit. So let's have Congress and the president get their stuff together and get us a nice little infrastructure deal.
Yeah, I think that would be huge. And I think that's kind of what he was saying. He's saying, hey, guys, listen, we believe in our future. We believe in our prospects. We're a good, well-run company. We pay a dividend. But until we get that deal done, we can't project out what our earnings are going to be, because there's too many variables that they couldn't predict. So I thought it was an interesting little report.
Unlike lowering interest rates and unlike quantitative easing and unlike repo actions and unlike bailouts and unlike crony capitalism, infrastructure helps all.
Mm-hmm. Yeah. Yeah, I think we can all get behind.
What does modern monetary theory of borrowing a lot of money to build infrastructure help all?
That's not modern monetary theory. Crony capitalism is.
Modern monetary theory is print the money as needed and spend it as needed.
Dude, that's Keynesian theory.
That's Keynesian economics, Cody.
That's Keynesian. I mean, when you're printing money to build infrastructure and give people jobs and put
modern monetary theory is built off of some Keynesian theories. It's just the modern monetary theory is the idea that a country itself can never go bankrupt. And so they can just print their own money.
Thank you, Cody Maynard Keynes.
Listen, I'll be more than happy to debate you on economic history, Cody.
No. I'm telling you, modern monetary theory takes some Keynesian economics into account.
Yeah, it's all an evolution.
Well, yeah, all economics evolves into one another.
Yeah. Yeah. Podcast topic, no doubt about it. We still want to do rapid fire.
Topic.
I think that'd be a
good podcast topic. It's the difference between MMT and Keynesian economics versus capitalism.
Yeah.
You would have to go through. Are you going to go through all the neo Keynesian, all the evolution of it?
Oh, I'd be more than happy to walk everybody on the podcast through that. Just not in the halftime.
Listen, get Kleiny on the podcast and let's talk about it. I think that would be fun. That would be a lot.
Kleiny debating.
100%.
Two old school capitalists crying in their beer.
Yeah. That would be.
I'll listen to that.
Yeah, for sure. Rapid fire, boys. Let's do it. Rapid fire is every Tuesday. We used to do it 2 days a week, Matt.
I'm ready for rapid fire.
There you go, Gino.
Oh, there's Gino.
Rapid fire.
All right.
He's been here for a while. He's just been quiet.
Everybody pop in.
Hey, real quick, as everybody's popping in your symbols for rapid fire here, Gino, a little bit of filibustering as people do that because we are on a delay. Gino, you were at the Legacy Education Hall of Fame over the weekend with Larry, correct? You were his mentor?
Yeah, it was an awesome weekend, man. International Hall of Fame at that. And we had some tackle teams out there that just came out to meet us just to be there. And I'll tell you, a lot of real estate, a lot of investors, a lot of entrepreneurs. Nobody stood out more than the traders. That's just the way it is, man. We had a lot of energy. And
we'd like to have a lot of fun at those types of things.
It was amazing.
Tear it down.
Yeah. So I'll tell you what, I can't wait till the Trader Expo. We're all going to be there, guys. And we want the team out there too. We're going to have fun. Fun.
I don't know if I was ready to announce that, but thank you. Tackle trading is going to be down at the Traders Expo down in Las Vegas in the first week of November. So this is our first Traders Expo. We're excited to get down there and shake some hands and kiss some babies with other people in the industry and hopefully get more people in our community. And, I saw some pictures there, Gino, of you and, some of the tackle team. I saw Jimbo there and Larry and some others there on the clubhouse. So if you want to see some of those pictures, guys, go check out Larry's post over there in the clubhouse. It was awesome.
Yes, it was really cool. It was really cool to see that. Gino, did you give a speech?
Oh, yeah, I gave a speech. And, of course,
rounding applause and all that kind of stuff.
Oh yeah, standing ovation, round of applause. It's just what I do on the weekends. But
that sounds like Gino's Oil Insiders, by the way.
Yeah, I'll tell you. But Matt, you know how we are. We only get so much time to speak, and we always filibuster. And they try to yank us off the stage. Yeah, they were. We went a little long, but I'll tell you, it was fun. It was fun. So much inspiration, so much positive attitude.
That's awesome. Yeah. That's awesome.
I really enjoyed the stories. I hope you guys can hear Larry's story someday. It's very humbling, inspiring, motivating, and he's going to be here on Tackle, guys. He's going to be a Tackle member real soon.
You know what? We're going to bring Larry. Larry, we're asking you publicly. We want to bring you on your podcast to interview about your journey, your experience, and everything. So we'll bring on Larry if he wants to the podcast, and he can tell that story for the entire team.
I love it. I love it. All right, let's roll here, boys. Rapid fire. We're going right to left. Gino, the talent, is popping in here. So we're going to start with Gino, then Cody, then Matt, then Noah, then myself. And let's start with OXY from Jimbo. Gino, Occidental. What do your oil insiders tell you now, Gino?
I don't care what my oil insiders are telling me. It's bouncing off a downtrend at a low of 40 here, and it's going to hit its head on the resistance of 42. And you know, it's just boring right now. It's boring, slow down trending stock. Do love the naked puts on it, though.
SAP, Cody. Now, I believe Jimbo works for, or did used to work for this company, Matt. And so
he did.
You always have emotion about the stock or the company that you work for.
Well, it's the negative to value investing, Tim. Right. It's because we put the beer goggles on about the things we're around and we don't see some of their flaws sometimes. Value investing is awesome, but like every economic system and every trading system, there are flaws to it.
Yeah.
So I don't know what the news was, but that's a pre-earnings gap right there. It's holding right at the point that it gapped out of, but with earnings right around the corner, I want to see what it does there before I touch it.
Nike, Matt, what a great company, great brand, all that kind of stuff. Company that I've been interested in for a long time, traded a bunch. What you read?
On Nike?
Mm-hmm.
Let me pull it up. Nike, I got breaking out of a little bit of a consolidation formation with the resistance level right there at about 95.25. I wouldn't chase it after 5 consecutive days where we see price appreciation. Look for a high base to potential form here and then trade the breakout of the high base. That's what I'm seeing.
Yeah. Sienna, I'm going to have Noah take this one. Aforementioned healthcare companies in the news from earnings perspective. Noah, that's a bear retracement, isn't it?
It is. Well, it's down below all those moving averages on the daily chart, but this makes me want to back out to the weekly chart and kind of
no weekly charts in rapid fire.
Oh, it's so rapid.
Back to daily.
No.
That's the way. That is cheating. Yeah,
cheating.
No.
Hey.
That's for like relationship Thursdays. All right.
All right.
We'll get to that one.
That is relationship Thursday.
GCC from Majid. No, I'm trumping that one. I'm in charge right now. GCC, Greenhaven, Connecticut, I guess. I don't know the company. Interesting long-term neutral chart, kind of an inverted head and shoulders there. It's got to break out for any kind of technical signal. Gilead to Gino. This is from Chris Couch. Chris, always good to see your name out there. Gino, what you seeing in Gilead?
Oh, Gilead, looking at the weekly Fibonacci, I'm actually looking at throwing on a Elliott wave here too. No, actually, I am seeing a overall downtrend long-term, but earnings around the corner, a big bump on the biotech sector. A lot of overhead resistance here, guys. I'm looking for a swing high and neutral.
Here's a perfect company to pitch to a Texan here, Yeti, Cody, outdoorsman. The career products.
I love this company.
Yeah, buddy.
Yeah, just buy it.
Yeah, just buy it.
No, it's actually in a very neutral pattern. It did have a breakout above that 200 right there. I want to pull back before I get back into it. It's neutral though.
Matt, CVS. Let's get your take on this company. Had a nice reversal over the last few months here, Matt. Used to be a Tackle 25 company, actually. What's your read?
Used to be a Tackle 25 company, and the moment we took it off, it went neutral and then bullish. So good luck to that one. CVS here, a little bit of retracement, finding the breakout channel at $65. To me, you guys know my style. I don't like deep retracements and then quick follow-throughs coming into breakout. A lot of those times it fails. I would like to see some consolidation and then a breakout, maybe a hold cup and handle type formation forming here. The breakout is absolutely tradable, no doubt about that. I probably would not, just given the fact that I do see it a little bit of range up in the short term. I don't like chasing after 4 days of price appreciation.
Hey, real quick before you move on, I know it's not Relationship Thursday, but this is, Matt, you broke up with this company and it started saying someone else.
No sidebars in rapid fire, Cody. I apologize. I know I stepped on your joke there. There are no sidebars in rapid fire. Roku is
good effort, though.
Noah, we had a great question in the clubhouse on this one. Give me a read on the technicals.
Well, technicals, you had a pretty deep retracement, and it's now getting back up above that 50-period moving average. Some momentum, it's filled its gap. So I think if you can stay above that moving average, I might like this on a retracement better, but not a bad setup.
AIG, the original bailout company, always going to have a place in my heart for this one to want to see it crash and fail. But neutral in the middle term here, Matt, not much there. Earnings coming up here. Let's keep moving through the markets.
Goldman Sachs is perfectly fine.
Another debate. FNB, FNB from Ilka. Ilka, always good to see your name, Team Tackle member out there. Gino, gap out or run out, I should say, but earnings coming up and into resistance. Yes.
Yeah. Going into resistance, earnings. Stay away from this pattern until after earnings.
And I don't know if these are different companies here. FNF actually from Ilka. That's a more interesting pattern, but earnings coming up here, a little high base pattern. We're going to kick right through that one. Just two more here, guys. Code D, I'll give you jd.com.
Neutral pattern, big candle today. Not sure what it is, but it's got a lot of resistance above at 32.38, which is the old high, or 32.50. I want it to break that before it goes bullish.
And Matt, one of our favorite companies to do business with, but just a dog stock here, Zoom Technologies. Zoom Video Communications in a downtrend and breaking down. What's your read here?
Yeah, I believe we had Zoom on our bearish, was it an options report?
It was option report.
Yeah, bearish options report. I do think you're range down at this point. You're showing a little bit of massive volume today. What's going on with that?
Yeah, that's one where you got to dig in. I'm seeing a light range candle down 1%, markets up 1%. So that's relative weakness. But obviously there's something going on at the open.
Something's going on at the open.
Yeah, I don't know. But it's a good eye though. I think there's a pro tip right there. Whenever you see a volume spike, dig in. You got to dig in and figure that one out. No,
you got to figure it out. You got to figure it out.
Could be a lot of things. Could be institutional buying, could be whatever. But
I'll tell you, if you traded the retracement, it's time to start adjusting stop losses down and trailing that stop loss. You're obviously coming into first target type level there at 70. I still think ZM wants to test its IPO price listing though.
Yeah, probably. Guys, wonderful show today as always. Gino, thanks for popping in here. Last minute, always great to see your name.
Awesome.
By the way, I love the recording you did on the lounge the other day. I know you and Noah and Coach Mark and Coach Slavic pops in every now and then. You do those lounges. Kind of explain what the Traders Lounge is, Gino.
Yeah, Traders Lounge is basically a way to wake up in the morning, plug into the market, and get some direction from professional traders, whether you're beginner, intermediate, or advanced. And that's the thing, Tim. We try to cater to everybody. So we start off with a basic outlook, take questions, interact with the students and the team members. We give you our honest view. And sometimes we even go into strategies. And actually, sometimes, quite a few times I'll play some trades, Tim. And what I do is I actually go slowly through my platform, whatever I'm using at the time. And I break it down to how I set up contingent orders, how I set up triggers.
Yeah.
How I set up my stops and position size and how I do the mathematics to do it correctly. The most important things to trading, basically. And I do it slow enough and we record it so you can archive it and practice it. And that's what it's all about.
Well, we don't record all of them. We record them.
Not all of them. Only the good lessons.
Yep, that's right. Yep. And we record all the nightly shows though. And we do have one of those tonight for the pro members at Tackle Trading. Matt, it makes you feel great when you realize coaches like Gino and Noah are in there popping in, teaching the lounge. The value our community gets for that pro membership is unmatched, in my opinion.
Well, the only thing I'm going to say, Gino and Noah, Coach Mark, Slavic, all the coaches at Tackle, they are wonderful, wonderful traders and only surpassed by how good of educators they are. They are fundamentally some of the best educators in the industry. And that, obviously I have bias. That's value investing there as well. But I've been around this industry for a very, very long time, known many, many players in this industry for a very long time. And there is no finer educators than the ones at Tackle Trading.
I agree with that as well. Matt, you just last night edited and got our podcast out there published and a new episode is out. How do people find that podcast? I was excited. I only am a little bit through the actual finished product there, but how do people find it and kind of pitch the podcast?
Obviously, you can go leave it at tradingjustice.com. You can download it on any podcasting app, Stitcher, iTunes, Spotify, just everywhere podcasts you can listen to. And the best way to help us promote that podcast, guys, if you enjoy the effort we put out there every week, is to give us a 5-star rating on iTunes. iTunes, that allows us to get more visibility because how their algorithms work is they're going to based on rankings and other viewership. So that's going to help us get the message out there and get more people into Tackle Trading to help this community out even more. So if you could do us a favor, if you like the podcast, go give us a 5-star review over there on iTunes, and that'd be the best way to help the podcast out. And obviously, Trading Justice on Twitter, we post it there as well.
And Cody, we are at the finish line, literally like one one step away from that Forex 101, right? I mean, you've been saying it publicly to our team out there. You've been teasing them for weeks. Are we there this week?
Yes, we are there this week. We are there this week.
Matt, you heard
You
it.
said that last week.
Yeah.
No, I said we were about a week away last week. A week away.
Oh, no, that's not what you said. We can pull the video recording on this, Cody.
Let's pull the video recording. I said we're about a week away.
I like it. I'm excited. I know it's going to be an incredible
A week
product.
away was last Friday's deadline, right? That was the week away.
Okay, I know I missed a deadline, but okay.
You act like I don't know the deadline.
I can take Cody's side on this. I'll take.
You said I'm going to ask you publicly again. I'm going to say we're about a week away.
Well, I'll just put it like this. I was talking to Coach Tim and Noah last night. We're launching a coaching product, and we're in the preliminary stages of developing the coaching product, and we're very excited for this coaching product to be able. It's a product. It's a higher end product, but you'll be able to work one-on-one with one of our coaches, and we're tracking everything online. And, we're going over the curriculum and what we're going to cover and everything. And I said, all right, boys, when do you think we can get this done? And I'm like, we're going to get it done by December 1. And Noah and Tim just sit there and look at me. And I'm like, yeah, I know we're not going to hit the deadline, guys.
We'll give it the good old college try, though, right?
We will. January 1 is my real expectation.
Yeah.
Mr. Noah and Tim.
No matter when the deadline is, it's going to be incredible. And, the reality is we continue. And here's the thing, guys. And if you're out there and you watch what Tackle Trading does, just let me ask you just a blunt question. Is it incredible how much content we create? Because our team, when we've got an amazing team of content creators and coaches and veterans in the market, Matt, but we put out a lot of content and we hold ourselves to a high standard for that. We're going to continue to do it, and we're going to continue to push those lines of what we can achieve. There's no question about it. I'm excited to see Forex. I'm excited to see all the things that are happening at Tackle.
The one thing I'll say, we put out more content than anybody can digest on a weekly basis. Yep. There's no doubt. Blogs, webinars, shows, reports, everything we do on YouTube. I get it. Guys, don't ever feel like you have to do everything, because nobody does everything. Find your routine with Tackle. Find your days you like showing up, and so on and forth. But the reality is we're here for you when you need it. Yeah, that's the reality.
That's right. That's it. Guys, go listen to the podcast. We interviewed Steve Burns, and I think you're going to like it. It was a fun podcast. I enjoyed recording it, Matt. I have not finished the whole thing. I can't wait to hear it. But go and listen to that podcast, guys.
Tim, my first, and I'll just be perfectly blunt, when I was listening to the interview, when you were conducting it, I wasn't engaged that much. Like I just wasn't. And maybe it's because it's things that I've talked about many times, and I just kind of just zoned out a little bit. I was re-listening to it last night, T. Mm-hmm. There are some gems in that interview. I'm talking perfect gems in that interview. I absolutely loved it the second time I listened to it, and I learned something. I'm going to listen to it a third time, because you can learn so much from two traders just talking. And you did a wonderful job on the interview. And there's some genuinely funny moments, especially in the game. And I'm not going to spoil it. Tim may have broke his streak. That's all I'm going to say. Tim may have broke his streak. That's all I'm going to say. And when you listen to the podcast at the end of it, hit me up on Twitter to let me know how you think about it.
Matt, there's a small portion of our Team Tackle members that are pounding the table for Coach Frank to come back. It happens every day in the halftime report. Right at the end, they're like, give me Frank.
I get it. But as the leader of this community, show up.
Yep.
I'm sorry. I'm going to be blunt. Show up. I get it. But there were times we would have 13, 14, 15 people show up for live content. And that's I love Frankie. He puts it out. He puts out great content. I want to put him out more. I would love to bring back that show. But if people aren't going to show up for it, we're wasting time. We're wasting resources that I can have Frank doing other things.
Maybe we just bring Frank in the halftime report twice a week. We'll have to talk to Frank. His schedule's busy, guys. He does a lot of onboarding. We're doing I'm aware of the Frank fans. I'm a big Frank fan myself. Breakout Frank is amazing. If you want to get Breakout Frank's content, Matt, follow us on Twitter. He does all the Twitter
He
stuff.
does all the tackle trading Twitter.
Yeah. I mean, tackle trading on Twitter is a great way to follow Frank. Give him a shout out. I like it.
You're gonna get all of his breakout candidates. It's breakout Frank for a reason.
Frank. We are out. We will be back tomorrow, guys. Great job, Matt. Great job, Noah. Thanks for popping in, Gino and Cody. Get Forex 101 done. We will see everybody tomorrow.